Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming U.S. employment report for January, due out on Friday, and the outlook for the dollar. So Marios, back in December, non-farm payrolls fell by 140,000. And with ongoing lockdowns and restrictions in several states, what are we expecting for January? And what are the risks surrounding the dollar and stock markets from this data?
Hello, Maria. Well, the forecasts point to another relatively soft report. Non-farm payrolls are expected to be positive, but they're expected to only rise by 50K, which is not impressive by any means. And the unemployment rate is expected unchanged at 6.7%, which is where it has been stuck since November. Now, overall, I'm noticing a divergence within the US economy lately. If you look at the PMI surveys, they suggest that large businesses are doing just great. But if you look at labor market data, then you start seeing some real signs of stress lately. And therefore, I think that these data are going to be extremely important for the overall narrative of the economy. Now, as far as the market reaction, I think that the risks surrounding both the dollar and stock markets from this data are asymmetric and tilted to the upside. And here's why. If we get a positive surprise, that's great news, for future consumption, for the economy, and by extension for the stock market. And additionally, a strong print, a stronger than expected print, could intensify speculation about how soon the Fed might begin to withdraw some of its massive support, which is also positive for the dollar. Now, on the flip side, if we get a disappointment, I don't think it's going to hurt either asset much. Now, if we have signs that the recovery is losing steam from a disappointment, that would imply that the Fed will keep its extraordinary support measures in place for even longer, which is a positive, which is good news for equities. And as for the dollar, more Fed support is bad news, but the disappointment could also put more pressure on the politicians in Congress to speed up the 1.9 trillion relief bill that they're trying to pass. And it could also increase the chances of a future infrastructure package later on. So that would imply a stronger outlook for growth, and it could potentially negate the negative Fed effects on the dollar. So overall, I don't think a disappointment is going to hurt either the dollar or stocks much. Now, having said all of this, it's crucial to say that US employment reports are not the event they used to be. So they've lost their bang, in a sense, in moving the markets. The market reaction nowadays tends to be minor, and it usually fades within a few minutes. It has essentially become an intraday volatility event, not something that sparks new trends in the markets like in the past.
Okay, taking all this into consideration, what's the broader outlook for the dollar and stock markets?
Well, I also think it's positive. So on the equity market front, we have the economy recovering pretty robustly. You have vaccines being rolled out, the Fed being supportive, a lot of government spending being in the pipeline, and more to come, most probably. So I'd say the outlook for stock markets remains quite positive. Now, as far as the dollar, it has been acting like a safe haven throughout this crisis, but I think that we are going to enter a new era where it loses, let's say, its safe haven qualities, and the dollar becomes more aligned with US fundamentals. And I'm looking at euro dollar especially. If you compare the euro area economy with the US economy, you see a massive divergence there. Most of Europe is still in a harsh lockdown. It is far behind America in the vaccination race. The European economy will almost certainly suffer a double-dip recession, and it doesn't have any impressive stimulus in the pipeline either. So I think that this narrative of economic divergence between the Eurozone and America could become a much bigger theme going forward, and therefore I think that the risks surrounding euro-dollar are tilted to the downside. And that's also supported by the technicals, because lately we've had a head and shoulders formation being violated to the downside, which sets the stage for more decline in the pair.
Marios, thanks so much. And thanks for joining us at xm.com.